Hello everyone, it's Petko Alexandrov, and in this video I will explain how I trade gold and I will show the different options. But the most popular way to trade gold is via brokers using CFD trading, which means contract for difference, or in other words, we trade on the value of the asset. So how that works? We fund an account with a broker, let's say $10,000 is what I will be using for the purpose of this video. You can see that on MetaTrader platform I have balance of 9,995 because I have the first trades opening with the robot that I will show you a little bit later. So I have funded a real account of $10,000 for the purpose of this course to demonstrate how the whole thing works, and I hope by the end of the course I'll be able to record some examples. And you can start as well using a virtual account, which means you will be not risking real money and you will be just practicing the strategy and the robot. Now I will explain everything about MetaTrader, choosing a broker, placing the robot on the chart during the course. But in this video I just want to give you the big picture. So trading with a robot is possible on MetaTrader platform using a broker, and you can trade this strategy on any trading platform like TradingView, for example, which is very common for technical analysis, or if your broker has a web platform, you can still trade gold. And the good thing actually about CFD trading is that we can trade in both directions. We can buy and sell it on a higher price to take profit, as well we can sell and close the trade on a lower price and gain profit from that. Of course, if the trade goes against our direction, we will have no losses in the account. But with very simple words, this is how CFD trading works. We fund an account, we trade different assets. If we make profits, we can withdraw them. It is very important to select a regulated broker and to make sure you are capable of withdrawing money. I will dedicate a whole lecture about that. Now, you can trade gold physically, but this is more expensive and riskier personally for me. For example, in Bulgaria where I live, we have a few exchanges. I will just show you one of them. I will put it right here on my recording screen and I want to show you the difference, right? So the current price I see on the trading platform is 1815. What I see in this exchange where you can buy gold physically and sell it back after that is that 1 ounce is 3,572 Bulgarian levs. Now if I show you how much that is in dollars, you will see that this is $1,900, way more expensive than the market price we have now, nearly $100 more. And this is the price they sell. And let's see the price they buy. It is 3,495, 3,495. I guess this will be about $50 lower. Yep, something like that, $40 to $50 lower. So $40, $50 is the difference between the buy and the sell price for 1 ounce. And if you look at the trading platform, you will see that the difference here is just 12 to 20 pips. It is changing all the time. It goes maximum to 20 or 30, and this is 20-30 cents of the American dollar. So it's not even $1 American dollar. Way lower spread. We call it spread, the difference between the bid and the ask price, compared to if you trade gold physically. And at the same time, if I go to that exchange and I buy the gold physically, let's say I buy 1 gram or 1 ounce, I have to store it somewhere. That requires safe, and at the same time there are certain conditions you need to follow to store the gold in a way that it will not change color. You have to keep all of their requirements so you can sell it back to them, right? That's why for me trading physical gold is way more expensive. One, because the huge difference between bid and ask price or buy and sell price. Two, you have to store it somewhere safely. And three, there is the risk that due to some weather conditions, humidity, or doesn't matter where you live, you have to keep it in a very same shape and color as you bought it so you can sell it back. Okay, this is why CFD trading is more suitable for traders, because we can trade way cheaper. The difference between the bid and the ask price is very small, and at the same time we can trade with robots, what I like the most and what I will share with you in this course. And in the next section I will show you straight away how to choose the broker, how to install the MetaTrader platform, how to place the robot over the chart and backtest it, and after that you will be able to test the strategy. And as well, you will see what is the strategy behind the robot, so you can trade it manually on any trading platform that you wish. So if you're ready, let's go for it.